Money printing is okay, inflation is not okay. We have a different take on why the Fed is raising rates right now, a little bit different than the general narrative. And the point here is the following. You have to go back and ask yourself, what's the purpose of the Federal Reserve of the United States? And the purpose of the Federal Reserve of the United States is to support the banks, in particular Wall Street. That's the history of the Fed. This is not some sort of conjecture or conspiracy theory. That's just how it actually started. Wall Street bankers wanted the Fed to exist because they needed somebody to bail them out or make sure that the system doesn't collapse every now and then. Now, what morphed into that is basically that the Fed balance sheet is something that Wall Street every now and then needs to use to make sure that their businesses don't go bust. This is in general what the Fed is. Now, inflation is when the Fed uses the balance sheet and it somehow leaks into the economy. That's when inflation happens. In other words, we did not have inflation for a long time, despite printing all the money, particularly after 2008. And that is because it stayed within the Wall Street system. 2008 was we expand the Fed balance sheet to make sure that the Wall Street banks don't go bankrupt. 2020 was we expand the Fed balance sheet to give money to the people. And what happened is that the Fed, of course, had to U-turn right away, raise rates, and stop all this. So in other words, this is a power game like it's always been. And the reason we have higher interest rates right now is because somehow the Fed balance sheet is leaking to the public. And that is, on the one hand, of course, a dangerous thing because God knows what's going to happen. But on the other hand, it's also a good thing because finally the Fed is forced to stop with this insanity of expanding its balance sheet. This is not even wrong podcast. It's November 28, 2022. This is Krim Delco. For the day, the fund is down 40 basis points. The market is down 1.8%. For the year, we're down 56.7. The market is down 16.8. We're underperforming by 39.9%. I want to talk about this particular issue with inflation and give our take. But before I go there, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So our mission is to talk to you about general topics that affect the market because that's what a hedge fund really is involved in. And a hedge fund manager hopefully is spending time and energy in trying to understand the context of the market. But we also have daily business to deal with. In other words, we have daily P&Ls and some explanations. Now, we don't give explanations on a daily basis, oh, we're down or up, this and that, because often you can't do that and it's futile to do that. That's why maybe for newer listeners, you might miss the sort of typical, oh, today we're down 1% because blah, 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 blah. Now, I just want to talk a little bit about our portfolio before I go into the topic of today. The portfolio is mainly Tesla, and then we have some CRISPR stocks, in other words, stocks that are exposed to new developments in molecular biology, in particular CRISPR. Tesla is being affected mainly by China and a little bit also by Elon Musk's escapades with Twitter. And of course, the threats against him, that's a risk for Tesla. But in particular, I would say China. The problem in China is that the Chinese government is turning into sort of a Mao 2.0 state, state, which is they want to control the economy, they want to keep the power, and they want people to do what the central government wants them to do. When I say people, I mean in particular also, let's say the mayor of Shanghai and the people that run regional governments and all of those people, but then also it trickles all the way down to the people on the street. And what China has done in the last 2 years is basically lock down the country in the pretext of COVID. But in reality, this is our belief, this is a conjecture that these lockdowns are really house arrests and they're meant to prevent an uproar, an uprising. And this is now where it's overboiling. We have issues in the west of China, in the Urumqi region. I think those issues are related to COVID, but not just, this is not about people having sort of a different opinion about vaccines or masks or lockdowns, kind of like the way we had it here. This is a lot deeper than that. This is, hey, you can't put us in house arrest. We don't care anymore what the pretext is. We want to be at least free to pursue our own business, to do our own thing, which has been the policy of China for the last 30 years. This has changed. It has changed in the last couple of years, and it's becoming more and more extreme. We see that anecdotally here in Los Altos, where we live. We see a lot of people from China off the boat, educated, wealthy Chinese who come here, park their money, park their kids. This is more serious than just, this is not downturn in China. They'll figure it out. This is a little bit more risky. And Tesla is highly invested in China. We've said many times in the podcast, it's a huge risk for us as investors. The only silver lining is that the only risk we also saw on the competitive front was China. And therefore, we hope that this whole situation at least will mitigate the competitive risk for Tesla. Competitive, I meant electric cars and AI, both of those fields where Tesla is the leader in the West, but has competition from China. So now let's get to our conversation about the Fed. Now, there's a lot of questions being asked, simple questions, and we like simple questions. So let's say you're at a Thanksgiving dinner and your 10-year-old nephew or your 75-year-old grand uncle or whatever asks you a simple question. Why is the Fed raising rates now? Why not earlier? Why is this pivot? And the answer has been, there's just sort of what I call a Bloomberg answer, which is simply, okay, this is what the media is telling us. Oh, well, we have inflation and the Fed is forced to raise rates. Now, that is kind of true, but it's a little more subtle than that. In other words, the Federal Reserve, money, and all of these things are a power game, which is, and I really like Safdie's analysis, Fiat Standard. Whoever hasn't read those books, read them. I haven't read the Fiat Standard yet, but I've listened to his podcast so much and the seminars that I think I have a pretty good sense for what he's talking about in the Fiat Standard. The control of money is the ultimate power, because money is the software that allocates labor. In other words, money is the software that is the answer to the question, what should I do next? The question that everybody asks themselves. Students, professionals, old people, retirees, you name it. Anybody who has a decision to make in what to do next, how to invest intellectual capital, money capital, energy, whatever you want to invest or whatever you have to invest, the question of what should I do next is typically solved by money, at least in our system in the West. And the Fed, by having control over the money supply, and now I'm paraphrasing Elon Musk, has the ability to edit the software of money a little bit. In other words, siphon a little bit towards their friends and cronies, make sure that they're happy, and then let the rest sort of live and be happy. Overall, this system is working better than other systems. It's not perfect, which we might main criticism of Austrian economics, which is fine. Look, you are right in the sense that the Fed system, the fiat system is bad, but we haven't come up with a better system right now. And I have a critique to the Austrian economics front, and hopefully I can do that at the end of this podcast, but I don't want to get too much tangential here. Let's stick with the argument. My point is the following. The Federal Reserve has been instantiated in 1913 by Wall Street bankers. There's a fantastic book, which is sort of the history of the creation of the Fed, put in the show notes. One of my dream destinations as a vacation has been Jekyll Island, which is the island in South Carolina, where there was a secret meeting between Fed officials and bankers, and they kind of created a blueprint which then got passed by Congress, and basically the establishment of the Federal Reserve was sort of put in stone there. So Jekyll Island is the symbol of the creation of the Fed. Now, the Fed itself has a lot of negatives. It also has a few useful things, but the main negative of the Fed is that you give bureaucrats, politicians, people in power, the ability to edit the money of a system and therefore profit themselves. This is what happened throughout decades, particularly when the US went off the gold standard. Now, most importantly, most recently, we had a situation in 2008 where the Wall Street banks financed the real estate boom in the United States and blew up. They basically went bankrupt. Their assets could not cover their liabilities. So what happened is that the Fed started buying those liabilities off the bank's balance sheets so they could inline their assets with their liabilities. In other words, the Fed expanded its own balance sheet to favor Wall Street banks. That's why we had an expansion of the Fed balance sheet, and most importantly, that's why we didn't have inflation, because all the Fed was doing is filling the holes of Wall Street. By the way, similarly, this is what happened in Japan. That's why we still don't have inflation in Japan. What happened in the COVID crisis is that the Fed had to expand its balance sheet again because we did all these stimuli to help the economy get over COVID. COVID, which I basically, from an economic perspective, was a lockdown and a stop of production. If you do that, you have no goods and services being produced, and you have the bank expanding its balance, the central bank expanding its balance sheet and siphoning money straight to the people. This is the key. Instead of giving it to Wall Street like they used to, they gave it straight to the people, and the people spent it, and that's why we have inflation. The first phone call that came from New York, I'm conjecturing here, I don't have any anecdotal evidence that happened, but I'm imagining the CEO of Goldman Sachs or JP Morgan calling Jay Powell and saying, listen, this is not the deal we have. We have the deal that your balance sheet is ours. We use it for our purposes. You're not supposed to expand your balance sheet to help the poor and the disenfranchised and so on and so forth. This is not what we said to do. So you need to raise rates. You need to stop this. This is what happened. I'm very simplifying this. But the point here is that the power shift changed from the Fed balance sheet is just for Wall Street and the moneyed class to it's for everybody. And immediately the Fed stopped, pivoted, raised rates. This is what happened. Now, of course, we as hedge fund managers should have foreseen that. We didn't. This is our mistake, and we take that as a big miss for us. Not just we lost money, but we also we did forego a money-making opportunity. We should have foreseen that. We did not. In other words, when you analyze these macro events, you should not think too much about economics. You should not think too much about, ISLM curves and all of that stuff, because it's not really going to help you make money. What helps you make money is you analyze the power, the follow the money argument. Just follow the money and see who is profiting today, who will profit tomorrow from which action, why are people changing their mind. Like when the Fed started expanding their balance sheet in the pretext of helping people who couldn't work or didn't want to work because they were in lockdown, a light bulb should have gone off. This is not going to end well. Now, of course, there was this huge wave up and then down. In other words, had we shorted the market right around COVID when the Fed started expanding the balance sheet, we would have gotten killed because the market went up a lot. But now, of course, it's coming down. And therefore, again, this is a lesson for anybody who wants to start a hedge fund or is thinking about getting into the business. You should be very, very careful about timing in this business. Being right has nothing to do with reality unless you hit the timing right. And unfortunately, I don't have much more intelligence to say about the trading strategy. But this episode is not about trading. It's really about the concept of power and the fact that the Federal Reserve is there to support Wall Street. And when the Federal Reserve was misappropriated by, let's say, people who wanted to help everybody who got disenfranchised by COVID, Wall Street put a brake on it. Hey, you can't, and that's why the Fed is raising rates. This is our argument. Now, let me elaborate a little bit about, maybe for some people this might sound a bit too extreme, and I just want to bring one argument home, which is very important, which is the purpose of the Fed. It's very convoluted because we have this conversation. Well, the Fed is there to support the job market. The Fed is there, blah, blah, blah. The Fed's purpose, single most important purpose, is to support Wall Street. And there's two things the Fed can do. One, it can be an insurance policy for Wall Street banks, which is sort of the initial idea that people like, I think his name was Loeb, I forgot, a German investment banker who came from Hamburg, I think, married into New York aristocracy and then had an investment bank in New York in the early sort of 20th century. He brought this idea of the Reichsbank, meaning the German central bank, that he was familiar with as a German investment banker. He brought this idea to the United States, and he basically said, look, you guys, you have all these booms and busts, railway, and whatever else, telegram, and all these technologies that sort of were governing the United States economy in the late 19th century, and then you had these booms and busts, and you need basically a central bank to smooth that. So the insurance argument was one argument, and then the other argument why you need why you need a central bank is the sort of the Elon Musk argument, which is, well, you also want to be able to edit the software. You want to be able to edit money. You want to be able to channel productive assets, productive capital, and stuff like that towards your benefit whenever it suits you. That's, of course, what Wall Street discovered very early on with the Federal Reserve and started to use that. So having said that, now, today we're in a situation, and by the way, it's not the first time, but definitely after the COVID crisis hit, we used the Fed's balance sheet for other purposes than just to support Wall Street, and this is why we have inflation. Now, to be clear, I am on board with the Austrian economics theory or school of thought, which is that we always had inflation even before, because, of course, the things that, let's say, people, in other words, the inflation was only showing in the areas where people had access to the money printing press. So it's the private schools, the real estate in New York, and all that kind of stuff where, the people who have access to the money printing press, which is mainly Wall Street, and the sort of power circles in Washington, D.C., they had access to the money printing press, so their consumption showed in inflation. But most other people in America are not necessarily in the same markets. So if you have a house in Ohio, somewhere in the suburbs, you're not competing with somebody on Wall Street who has access to the money printing press. So you're not going to pay $20 million for an apartment. In New York, you're going to pay $20 million for an apartment because, well, I mean, that's the market you're in. And because the money printing press is so close, you have the means and also the necessity to pay that much money. And again, that has changed because after the COVID crisis hit, we had access to the Fed's balance sheet. Everybody had access to the Fed's balance sheet. Every small business, everybody who works in restaurants, in the hospitality business, had access to the Fed's balance sheet. It drove up inflation. The Fed had to pivot because Wall Street said, enough of this. We don't want to share your balance sheet with these people. That's, in a nutshell, our argument. I think the useful thing about this is, again, it's very important to understand the power dynamics in these types of situations. When you run a hedge fund, you can make a choice, like we did, to not get involved in macroeconomics. In other words, you don't want to understand all these power struggles, fine, but I think it's still worth understanding it just so you know why your portfolio is being driven by these things. So again, to summarize, the purpose of the Federal Reserve is to support Wall Street banks. The Federal Reserve has used its balance sheet over decades to support Wall Street, and that's why we had little inflation across the economy. We had it in certain pockets, real estate, private schools, things like that, but not in everywhere else. And when the pandemic hit and we were forced to stay home and lockdowns, people couldn't work, and the money was channeled very efficiently into the pockets of everybody. That's when we saw inflation, and that's why Jay Powell and the Fed now are either intentionally or by just coincidence, but it doesn't matter. They're forced to stop it because it is untenable for anybody that the Fed balance sheet is used by everybody, because that is literally helicopter money, and that doesn't work. As long as the Fed is only benefiting certain pockets of the economy, such as Wall Street and powerful people in Washington, D.C., it might work. But now that it's being uncovered to help everybody, it doesn't work. So the good news, and this is the last thing I want to say here, is that hopefully we understand now the function of the Fed. We understand that the Fed has an impact on inflation, and that we can rein in the Fed either by the Fed being more disciplined or by using Bitcoin as an alternative and leave the fiat system. Thank you.